Hello, everyone, and welcome back to another episode of Node Chats. On this episode, we're going to talk about cyber broking in 2021 across the US. And I'm delighted to have with me today a gentleman by the name of Derek Kilmer. Derek is, we've known each other for a couple of years. He's a managing professional liability broker with Burns and Wilcox. And hopefully he's going to give us an oversight into what he's seeing, how the market's changed, and general sort of risk appetite across the current marketplace. But Derek, thank you for taking the time. Really grateful if you could just give us a bit about your background, how long you've been with Burns, and kind of your story and your journey today.
Yeah, absolutely. Thanks, Neil, and thanks for having me. Really, the journey started with Burns and Wilcox after a small stint, or a short stint, I should say, on the life and health side. Kind of fell into professional lines out of college, and really took a knack to total learning cyber under my first mentor. So been with Burns about 8 years now, and in cyber mainly since the beginning. So as far as kind of where we're at now and how it's evolved, I think the space obviously has definitely changed. We're seeing kind of cyber evolve into where we were seeing more of the kind of the new markets in that small space, to now that changing dynamic with some of the breaches that have occurred, and some of the classes that carriers are now getting weary of. So with the shrinking capacity, that obviously creates the price increases, and all capacity issues partnered with some of the price increases. And then obviously your appetite's changing daily. So that's mainly what we've seen highlighted thus far in late 2020 and early into 2021.
So when you started, I'm right in thinking that cyber was still relatively new. It was a specialist class. It's increased. It's gone nearly mainstream. And it was quite a soft market back then, wasn't it? Because that was about the time when I was transitioning, when I first went to London. And I knew then that there wasn't that much domestic capacity. A lot was coming across the pond to London. There was good rate on some of it, but it certainly wasn't as claim heavy as it is now. And also I think the insured, like it always felt to me like there was a lot of first time purchasers, companies that you thought would have carried it forever. They were still considering it for the first time. So there was a good maturity of then. And then over the last kind of, would you say like 2 years, where the claims have really started to come in, and there's been a soft market started to go to a medium and then to like a hard market?
Yeah, I think we're kind of in between that medium and hard market still, because it's still relatively soft based on the number of carriers that are still in this space, right? And I mean, if you think about the market in general and what percentage of, call it, the Fortune 500 companies make up the cyber marketplace from a limit standpoint, it's relatively high. So if we think about that other sector of business, that other, call it 50% of the buyers, there's still room to purchase there. But the days of the $500 policies are done. And I mean, that's kind of where I started. It was kind of get as many out as you can. And I mean, from a revenue standpoint or a rateability standpoint, it was interesting to see the space evolve from kind of where it started on the third party side. And then we kept adding all of these first party coverages. And each year it evolves based on, what we learned last year, based on that, the new and improved breaches that we're seeing, or the responses from the hackers. So it's been interesting, but it's going to continue to harden, I think. And prices should be driven up, because it's been soft for a long time as far as comparison to what you're getting bang for your buck, as far as from a risk management and an insurance standpoint.
You touched on a good point about I remember we were selling $500 policies, even $500,000 limits, 250,000 limits, and those days have just gone. Also, what's changed massively is the price throughout the tower. We used to sell that you would get sort of top level, the last 10 million or the last 5 million would be going for next to nothing. And now as towers have been eroded, it's certainly rate throughout like as we've all understood how bad claims can go for an insured and how towers kind of get eroded. I think definitely those days have gone. Like we never do top level excess that's really cheap. Never do really $500 premiums. Like you say, I think the whole market has evolved with that. An interesting thought, and this is, I do want this to be about the wholesale broker and cyber.
Yeah.
Over your journey, has much changed in the way that you conduct business, like either technology or volumes or the way you interact? Do you think the wholesale broker's role has changed since you joined or started?
Yeah, definitely. At first, it was kind of training the retailer about the coverage in general, because we always compared it to that shift from that first time EPL buyer now is that first time cyber buyer. So different terminology, right? Still are. And it really fell on us to kind of educate. From there, now we have a marketplace perspective on what every quote should entail. And now what services are going to separate you from a prevention or detection side on the front or back end. So we're really pairing more security services with insurance, and the infosec side coming into this whole piece has made the dynamic change even further with, some of the new carriers that are involved in the marketplace today that, wouldn't be necessarily maybe with some of the historic domestics, or even how people were placing their privacy policies on their BOP. It's just a different thought process from kind of where we started a few years back.
Do you think that's going to continue? Do you think that's going to evolve on that sort of tangent of more security, more preventions? I mean, we have just had to announce, as a lot of other carriers have, sort of minimum standards, and you're seeing that very encouragingly, because yes, we compete with other carriers, but we also need minimum standards across the market. So we're all here tomorrow. And I think that we're certainly seeing the question sets we're able to ask a lot more currently than we've ever been able to ask.
Right.
Which is encouraging. And I think more people are, as you say, looking at better ways to try and assist the insured as much as they can and we can to sort of stay safe. And I think for your job then is what you're saying is having to, like you say, retail brokers will learn in the class. They've got their arms around the class, but now it's, in addition to just the insurance part, it's the additional services and controls that come with the different kind of products. And you're now having to reiterate that in the same way that you was the kind of the standard, what we call now standard coverages.
Yeah, absolutely. And I think as far as comfortability around asking more info, it's all about, from our side, painting a story on kind of the cyber journey and what our carriers have been through, right? Because actuarially, we're getting better at understanding breaches and where we've come from and what questions we need to ask. And we know that ransomware is on the horizon. We already know about what's happened in the cyber crime space and where that's a driver. Now you're throwing in kind of what's happening from a regulatory end, which looks to me like it could be on the horizon as far as issues coming up in the future. And I mean, as long as you have that, people are comfortable with having those conversations and answering the additional questions outside of where we came from. That, hey, what's your revenue and your name, and here's a price. And that makes a lot of sense from your guys' standpoint, and how we want to protect insureds too. And I think the data, though, that's amazing that carriers are producing for us, though, from just a sales aspect on the wholesale end, really does make our lives easier. And I know you guys, among others, have similar tools just to point out, how secure an insured might be from a simple scan up front. A lot of the times the first time buyer, which there still is a lot of, they just have no idea. And how can we make this process, easier for them, based upon most people don't understand technology in general, let alone the ramifications on a business from an insurance standpoint if they do have a breach.
Yeah, no, that's really true. One of the things actually that leads me on to my next question is, from your perspective, what makes, so not necessarily just talking about the product, but as an overall
Yeah.
solution, what makes a good carrier in the cyber market in kind of 2021?
Yeah. So from my side, we're looking to partner with folks that can provide those uh, prevention and detection services on both end. We're still looking for the league leading coverages, so those max cyber crime limits. We're looking for, you know, the dependent BI. We're looking for what you can put outside the limit. I mean, those are limit options that we can always tailor, and those are who we're going to continue to partner with as far as from our end. But also the claims handling is huge for us, because I mean there's a lot of um, bad stories out there
Of
from
course.
when the claim actually happens and how fast are we to respond. Was it easy on the insured, along with the story that the retailer had, because sometimes they can, you know, they're the true decision maker with the insured as far as hand holding. But yeah, so that's what we're looking for, and we want the, as far as from a risk vendor standpoint, we want you guys to partner with the best, and we're gonna hear if they're not, and that's how kind of we drive business moving forward.
That's interesting. It's and I think when it's because, and that makes so much sense. It makes sense anyway. It's a very obvious conversation. But now
Right,
with the amount of claims that we're all experiencing, like it's not like, I remember cyber being like, well, we don't have that. Like cyber is a class before ransomware, before social engineering.
right,
You didn't have that much volatility on your book. I mean, you would have
yeah,
some, like we would get like lost devices, and we would be like, holy moly, this let's, that's a huge claim, and
right,
like it just it wouldn't even register now. We probably wouldn't get how claims people would manage it. It wouldn't even be a dink
hmm
in the conversation. And I think that's what's changed, especially with ransomware. Like when you look at the speed that people have to react on a ransomware, and the BI implications, and how we have to deploy people and put them into the normally we'll have to deploy people on site to, it really is rolling out the cavalry. And you're right, if that, the carrier that doesn't have that, then you're going to have some real problems and real bad experiences. And
right,
that all comes upstream to you, doesn't it? As a wholesale
hmm
broker, I imagine it kind of leads me on to another point. When retail brokers are looking for wholesale brokers, yes, they're looking for alternative markets. Yes, they may be looking for people that you have relationships with, that they might have relationships with. But I imagine they're looking for guidance and expertise. Is that still
yeah.
the case in cyber? Are your retail brokers, are they still looking for you for that reassurance, that knowledge?
Yeah, it's interesting. There's a lot of that. There's still the ease of business where we're kind of stuck in that quasi, like, can we turn the quote quick enough or not? Which is still, because there is so many first time buyers that's what they're looking to present. But really, when you drill down to the and get as far as in the weeds from, like, hey, this the data breach related costs are increasing severely year over year. And we really need to have the insured understand that this claim could arguably be worse than if their building burned down,
Mm,
right? From just a true cost standpoint. And a lot of the times when we're putting it in those terms, insureds understand that they would never go without property, right?
mm,
Similar now with today's day and age in cyber liability. So a lot of the times it's just walking your agency through what is the need, why is this a need, how does it affect them, and
interesting.
then understanding the insured's needs too on, where do they think their biggest exposure is from a security standpoint. And a lot of them you wouldn't be able to take a guess at. And once you walk them through some of the other nuances of where, we've seen claims in their space, that really helps. And then obviously partnering with companies that can provide the data on that too, as far as what we're already seeing on their network. that makes it kind of a slam dunk.
So you certainly are very active in playing a role in helping the retail broker to sell the product and get the deal over the line, in addition to just explaining to them coverages and how it works. That's a big part of your role.
Yeah, absolutely.
Nice.
And that's something that people continually will seek brokers out for in this space. And it's more on the middle, the large market side. It's not as much from you know, call it the small business market segment, but yeah, we do get questions on that. There, there is a lot of classes that would have been easy for us to have those conversations on, even as late last year. That's changed from a tech space and a cyber space on where the market's going, and it's important to have those conversations often.
Oh, that's good. That's very interesting to hear, because I think it's all right presenting terms, and it can be quite hard to go through terms. If you present 5 quotes, it's time consuming to go through it, but also then helping not only to explain coverage, but also help with the certain tools that you get presented, some of the information that you are able to get. That's super interesting. And I'm sure retail brokers really do lean into that when they're finding comfort and trying to get first-time buyers over the line. We touched on hardening market, and you sort of felt that you wouldn't class it as a hard market at the moment. You would say it's kind of in between. There's certainly rate changes going on in the market, but the cyber market has always been a little bit like the wild, wild west, where pricing has historically been all over the place. I mean, we're certainly seeing rate changes from our experience when we're going up against different deals. But I think that there is still huge opportunity in a shifting market for appetite changing. The risk landscape continues to, more claims, more press around the claims. You'd be surprised. I would have thought now that more and more insureds, you'd struggle to find a board across the US that hasn't got cyber risk within the top 3 biggest concerns on their agenda, and that's a lot to do with what makes the price.
Yeah, no, absolutely. It's definitely on people's minds, or the forefront of most companies. This year's been interesting as far as cyber, because you partner that ideology on specifically. We know that there is breaches, but it's also hard on businesses considering COVID for that additional cost on something that they don't have to carry. So you have kind of those two things running hand in hand. And I'm still shocked at the number of folks that are entertaining a limit that's, potentially lower than they should be carrying, or what's recommended on our end. And still shocked from how many people are just looking at this from the first time, or how many companies will be, and this is in the smaller side, quick to maybe pull out of, return buyer on the cyber from a renewal standpoint. So it is still interesting on the business that we see. And again, we see all levels of from the small, middle, and larger market, and really all the way up to the $1 billion companies at this point. But I guess from a pricing standpoint and from an appetite side, I mean, I guess capacity, you and I used to be able to get 10 mil essentially with anybody we asked, right? Nowadays, 10's not offered. 10 specifically not offered in classes like the healthcare and municipality arena, which is tightened a lot more than any other thing classes that we see. So I don't think there's like this mass exodus. There's this general increase of 40%, but I typically see that 5 to 15% of isolated increases, and then it's greater in certain areas such as healthcare, which, we're taking a deeper dive into securities and record counts and everything that might have been overlooked because we didn't understand the consequences from
Right.
the law side. And that's all helping. And, we should get the rate where we can. That helps everybody.
No, it does. I think that's a really good way of conveying it as it's yes, there has been volatility, but that in some way, everybody's reacting in the right way to a degree. The rates or the risks that should carry the higher risk, we're understanding them better and loading them appropriately, and general cost of capacity has gone up through to cyber claims,
Right.
that it all reverses into. But the market is still very encouraging. The buying appetite is still there. And yes, carriers are reducing lines across the board, and would be the first to say that we've done the same. But that's what insurance does. It across every line of business. There's, it fluctuates, and cyber, I think, is a market that will for a long time yet fluctuate on what's happening in the landscape. So nobody spoke about ransomware 5 years ago. Nobody spoke. It was all. It was really a consumer issue. It wasn't a business issue, and that's completely shifted. Social engineering was the same. That was very that moved in very quickly. So
We never really talked about the frequency and severity of claims when we first started, but now when we see claims, daily.
Yeah.
At this point, where before we started within our book, it was maybe it was few and far between, but we knew it was on the horizon. So
that's. I mean, I think everybody will testify that yes, there's a lot more premium purchased than ever before, and that's growing year on year. But certainly the frequency of claim has never been higher, and we continue to try and underwrite our way around that, and that's the challenge. No, that's what gets us out of bed in the morning.
Right.
We're here to do. As we wrap this up, I'm always interested, because of your time in the market. If you were to look back, or if you look forward over the next 5 years, what do you think is going to happen to the cyber market, particularly? What's your like coverage changes, risk changes, appetite? What do you think?
Yeah, I definitely think we're going to see potentially less of those kind of new carriers entering the space, and we're going to see that kind of even out from who is taking that capacity, because they're not going to be able to take the large loss like some of the some of the names that have just been around since the early 2000s, or even into the 2010s here. But that's one of the things I think will really make an impact. I mean, I think regulatory, as I mentioned earlier.
Yeah, tell me about that. Where you go? Where's that come from? Do you mean privacy regulatory act?
Yeah, privacy. So just with what's going to happen in the U.S. based upon what already occurred with the California regulatory early last year, what's happening, and on your side in the UK with regulatory law, and states usually adapt and change law based upon kind of what I'm seeing in California. So how is each state going to adapt on this? What's going to be the fines and penalties leveraged on these companies, and how are the carriers going to respond to these changes? I think that's a really interesting landscape beyond what I expect the increase in ransomware claims to continue. Another area, I mean, with what happens with the SolarWinds incident and the supply chain, and everything, and how we manage just really right, and really how we're managing day to day with our business associates and our vendors, and how that's all going to work as far as there's going to be regulatory there from security updates and everything potentially. And then, I don't know if from this goes in from the IT vendors to other areas within the supply chain, and are you carrying cyber liability and why not? So from a contractual requirement, I would expect the supply chain to get tighter and have those cyber limits. If I was doing business with somebody, I'd expect them to carry something. So um, I think it's going to create more buyers. Um, but I also think that it's going to potentially maybe price some of those carriers out, or some of those new carriers. So that's kind of the 3 or 4 things that I would anticipate in the next 2 to 3 years.
Interesting. Yeah, it's hard to forecast 5 in cyber. We seem to be
Right.
in a time machine, don't we? Where
Mm-hmm.
it's hard. But no, I mean, this has been super interesting. Thank you for your insight into the wholesale broking in the cyber world in 2021. It's definitely going to be an exciting year. And yeah, thanks for taking the time.
Yeah, absolutely. I appreciate it, and thanks for having me on.
No problem.